Good morning, everybody. It's the 5th of May. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. How you doing this morning, Steve?
Yeah, not bad, thank you.
Looks like we might not be on TradingView this morning, so hopefully we'll pick up a few viewers in the other destinations that we stream. As always, if anybody wants to get involved today, please feel free to post up any markets that you're looking at. It's a big day ahead with non-farm payrolls. So yeah, let us know. So we're going to go through the latest headlines as usual, and then we'll get into the charts, have a look at how markets are shaping up ahead of this major event today. So yesterday we had the ECB. That was really the main event for the session, and they increased interest rates by 25 basis points, which was in line with the consensus forecast. There was, however, a shift in guidance with no formal commitment in the statement, and there would be no further rate hikes. But the bank stated it is determined to bring inflation down and will be dependent on data releases. According to Christine Lagarde, the outlook for inflation still offers substantial upside risks, and the longer-term inflation expectations warrant monitoring. She also noted that wages pressure has strengthened further, and as far as policy concerned, she added that the interest rate increases were being transmitted strongly. According to Lagarde, everyone on the council agreed that interest rates need to be increased, and some members pushed for an increase of a further 50 basis points. She added that it is very clear that the central bank is not pausing and that the bank is independent from the Fed. The euro recovered from lows yesterday. It lost ground after the policy decision amid a shift in guidance, and the dollar also gained support from weaker risk appetite. The euro recovered from the lows on Friday, with the ECB still considered more hawkish than the Federal Reserve over the next few months. In the UK, we've seen that UK mortgage approvals increase to 52,000 for March from a revised number of 44,000 the previous month. Although there was only a marginal increase in the overall mortgage lending, there was a faster rate of increase in consumer credit growth for the month. Norges Bank increased rates by 25 basis points yesterday, again in line with the consensus forecast, given that the inflation profile, the bank expects further rate hikes in June. And today is the big one with the non-farm payroll number, which will be released at 1:30 UK time, with consensus forecast for an increase in non-farm payrolls of around 180,000, with unemployment rate ticking higher to 3.6%. And average earnings expected to increase at 0.3% on the month. That's it for the headlines. Let's get into the charts. Steve, do you want to kick us off with a look at cryptocurrencies?
Yeah, sure. Let me just share my screen. Take a look at Bitcoin. That is in a symmetrical triangle formation at the moment, being contained by the heavy resistance above up to 32,500. We've actually, the highest we've got most recently is 31,000, just above there, and failed. Broke back down, and support now coming in anywhere between that 25,500 and 26,500 area below. Short-term chart is, as I say, in the symmetrical triangle formation and moving up towards the top end of that. I've just adjusted this downward trending resistance, which was around about here, just to take in these multiple touch points from Monday's price action and also from today's overnight rally, which has so far failed, but there is opportunity still, so we'll keep an eye out on that. But as I say, any rallies are going to sort of like find heavy resistance. Ethereum has broken above the 4-hour Ichimoku cloud, so slightly positive from a short-term trend perspective. We found support from a higher low, previous support down at 1730. Obviously, that's the pivotal one. Then 1766, and now we're finding support around about the 1800 mark. So that's looking good. Resistance-wise, the lower highs posted at 1940 and 1962 sit above, and we just topped out slightly at 1920, and looks like we're going to test that again. So again, we are it's a sideways price action, really, nothing really to see. Obviously, everything crypto supported by the dollar. That's the main currency that we talk about the cryptos in. XRP has bounced from 43.40 and it's sitting around the cloud. Good downward trending resistance comes in at around about the 50-cent mark, and also below there we have 48.70 as a resistance. Again, sideways price action, pretty non-event really overall, which I can't say the same for gold, the real commodity that you can actually get your teeth into. So price action obviously rallied from the since the Fed. We had that overnight move higher on Wednesday night. Thursday morning we saw the sell-off. We found support now around about the 2030 level. That would be quite pivotal today if we manage to break back down below there. That would be a clear rejection, and although there will be support below, I'll think that'll be a significant high in place. 2062, so levels to watch above 2062, the most recent high. Previous to that, 2070, all the way back in March 22, and before that, October 2075, the all-time high. So good ones to watch. Oh, let me just click on that again. All looks a bit messy now with all these lines on it, Steve. Yesterday, we can see that we had a gun-to-head trade idea. We'll talk about that in a minute. But yeah, posted a lower high yesterday afternoon, and we've been up to 2052 since then. So sitting poised, ready for the next move. And obviously that next move will be influenced by the non-farm payroll this afternoon in some way, shape or form. So 2030 support above that 2062 resistance. Crude oil had a bit of a recovery on Wednesday from the oil inventories, and we've maintained that positivity. Actually, that was the gap lower overnight, wasn't it, from the Fed? So oil inventories actually had a little bit of a sell-off into the Fed overnight. Markets did gap down lower, but quickly retraced. It was only a short while before it was back up and in line with Brent crude oil, which opened a few hours later. So resistance coming in now at 69.77, and support, I would say, around about the $67.50 to $68 level on WTI crude oil. Brent crude oil, pretty similar price action. 71.40 is just above there. 71.50 we'll say is support. Resistance coming in at 73.64, and really looking at the potential for a double bottom here if we manage to break that neckline, which we've poked our head through but not maintained levels above it. We're trying very desperately now. So around about where we're trading now, I would consider the neckline. So if we manage to stay above this level, and we've got good potential for a bit of a rally, potentially up towards the $75 mark on Brent crude oil. Natural gas has recovered in the last few hours. In fact, is that quicker? Yeah, last couple of hours we've seen a recovery. We've got a bullish outside candle on the 4-hour chart. That looks quite positive after making a low around about 209. Remember, from the daily chart, we've got multiple lows around this level, going all the way back to February, and obviously all these lows in towards the end of March and early April. We're revisiting them, and at the moment the daily chart looking like forming a bullish hammer. So that could be quite nice if we manage to maintain levels above, but we've still got a long way to go in the day. 205 is the level. If we break below 205, we've got obviously psychological $2 resistance, but then I think there's a chance of a really fast move lower. We can see that the momentum is turning over to the downside, so watch out for natural gas if you're holding longs there. Let's take a look at Joe can run us through the dollar, which is slightly weaker on the week, and yeah, see what we can get from there.
Yeah, okay, let's do that. There's a couple of requests coming in, so we'll get to those shortly. Talking FX first of all. So yeah, still waiting for the dollar really to make some sort of decisive move. Yesterday we continued to hold around support at 101.01. And below that we've got 100.82. So these are the key levels that we're watching. Today could be pivotal because we've got the non-farm payrolls, so we could see a pretty decent move either way. We did look as though we were going to break out of this wedge and then maybe go on a corrective journey with the dollar, but it didn't really play out. We hit resistance here at 102.23 before retracing backwards, and we continue to trade in a pretty narrow range for the time being. So watching and waiting. Obviously, if we start breaking through this major support here at 100.82, then it's likely to trigger further losses down towards this 61.8% fib level. If we break through 102.23 on the upside, then that could trigger further gains. So very pivotal point indeed at the moment. Looking at the majors linked to the US dollar, similar kind of situation, poised really for a move either way here on euro US dollar. Continue to see resistance work at 110.75. Unless we can break above that, then there is a chance that we may get a pullback towards the lower end of this bullish channel that's been in place since September last year. If we can break through this level, then it triggers potentially a move towards that 61.8% fib level on the upside. Clearly the underlying bias remains bullish, so the preference probably would be for a break to the upside, but we can't rule out the fact that we've got a pretty major data point today which could change the picture quite quickly. Looking at cable, that's on the front foot today, pushing higher, targeting this next level of resistance at 126.66. This is a previous high from back here in May 2022. So looking very strong indeed. Sterling performing quite well at the minute compared to other currencies. So that's the next level to challenge there. If we can get above that, then we're into a bit of blue sky territory here. We can see that there was a big slide in price here, so not going to be much volume there to prevent prices maybe from continuing to move higher. And then we'd be looking into this kind of range here around 129.81 on the upside. Let's take a look at dollar yen. It hasn't been doing an awful lot. It's rallied quite strongly in recent sessions, but then pulled back quite sharply as well. So still kind of moving sideways there. Very difficult to get a decent read on that at the moment. Let's take a look at some of the other dollar currencies ahead of non-farbs. Excuse me. So we can see that dollar CAD rallied into resistance here at 136.51 before stalling. And yesterday, well, in fact, today, we are breaking down through these previous support levels. So that's looking pretty bearish. Probably triggers a move down towards these series of higher lows here. So maybe down at this kind of region here, it might be worthwhile a speculative buy, but in the short term, it looks like it's going to remain under pressure. New Zealand dollar versus US dollar. So we've seen the commodity currencies start to come alive after the break of this wedge. We saw a pullback into 61.13, and now prices have rallied substantially higher, really. 4 consecutive up days in a row we've seen there, and we are fast approaching a series of resistance levels in and around this area here at 63.17. Let's take a look at Aussie. Similar kind of situation. It did look as though it had broken down from a wedge, but we're back now above that, having found support around 65.67. We've got resistance above at 67.93. There were a couple of requests for FX markets, so in fact there was only one, which was Swiss franc Japanese yen. So let's take a look at that. It would help if I had it on my watch list, wouldn't it? So Swiss franc Japanese yen. Okay, let's get rid of the drawings and go through this together. So we can see really strong move to the upside. That's very evident from the chart here. There was a previous resistance area here at 150.71. We broke through that very nicely on Friday last week. And now what we're getting is a pullback into this previous resistance, which should now act as support level. So nice breakout to the upside. Getting a pullback into this level here. We may overshoot it, potentially to retest the candle prior to this big impulsive move here at 150.23. So I think maybe looking to trigger some buys in and around this region, certainly looking at it from a daily perspective, would not be a terrible idea given how strong the move higher has been over many, many months. So a very, very clear uptrend in place there. A nice break to the upside. Buying pullbacks into kind of 150.71 to 150.23, I think would represent decent opportunities to buy. Just trying to try and look at the weekly chart, see if there's any other levels we can look back at for reference. There's a previous high, and we have to go all the way back to 1979 to see that high. So that's at 158.44. So I guess naturally that would kind of be the upside target for this. We've made that mark on the chart previously, and that's potentially where we're going to head to again. There was a gap there. I imagine that's been filled. It's taken a substantial amount of time to do it. So 1980 until 22.
Yeah, see, just it's good.
So
The gap will get filled. But hold
2-year-old
on.
gap.
Yeah.
That's older than me. It's it's yeah, interesting. So yeah, looking very strong, very strong uptrend indeed there. Obviously, we've seen yen weakness for a substantial period of time now, and clearly Swiss franc strength. So that's looking pretty good. Nice spot there from Mark watching that this morning on YouTube. Okay, I'll leave it there on the currencies. Let's have a look at some indices, shall we? There's a request there for DAX this morning, Steve, which will
Oh, hello.
be music to your ears.
Yeah, I was just about to sit
The
back
dogs
and
are happy.
relax. The dogs do seem happy. What are you barking at?
DAX. Every time you
They
say
want
DAX, I
as
think.
well. Yeah.
Yeah.
Yes. So let's take a look at DAX. Right. Weekly chart doesn't look so promising in DAX. We've got this potential for a bearish outside week on DAX, especially after the previous 2 weeks of hanging man candles. And this is a bit of a theme as well on especially the US indices that we are looking at. Slightly, I would call them topping formations. The bearish engulfing candle that we saw on Tuesday has really dominated this week. And since then, we have had a bit of a break below support. Market has reacted high yesterday, but it was a bit of a doji candle. So signs of indecision. This morning, we have kicked higher. So a little bit of a fight back from the bulls. And obviously, this is into non-farm payroll. So the volatility will turn up later. Looking at you can see this sideways price action really on the shorter term charts, the 4-hour charts. We're really going flatlining along this cloud. So the cloud is going sideways. It shows that we've previously been in this sideways price action. It's forward looking. We're looking from next week, around about the 10th of May. This should act as a little bit of a resistance level. It's not to say that the market can't go higher. Of course it can, but if we are lower, then this resistance level will start to build. Levels to watch today in DAX, 15,890. That was a swing high towards the close on Wednesday. And from Tuesday's price action, that's key, 16,000. Big psychological level up there. And let's take a look at on a longer term chart. We've got 16,285, which is the all-time high. So although the weekly chart looks pretty poor at the moment, we've still got non-farm payroll. If we get something decent coming out of there, that could easily turn around. However, after this week's price action, I'd be more negative, looking for that downside break, really. 15,660, that's the sort of level we need to break below and close below today to really sort of like put a top in. So as always, you know me, on indices, I'm always slightly bearish, looking for that downside, because when we do have the sell-offs, they're a lot more aggressive. They're a lot more easier to ride than the grind higher, I find anyway. We can see a similar sort of price action in Dow, the handyman candle from last week's price action, and bearish outside candle this week. And that is at a downward trending support line. So although we probed above it this week, we are back below it, and it's looking pretty negative for me. Support potentially coming in around about the 32,360 level. And that was from the upward trending support line from last October's price action. Nasdaq hasn't really, although we had a hanging man week last week, it's not even a bearish engulfing yet, but it is a bearish week, and we have stalled around about the 13,300 level. So that's the level to watch today. Last week's low would be the good one on the downside, 12,727. A break below there, close below there, and we would have posted a bearish outside week. So topping potential in these markets, and the S&P. Remember the S&P, we've got two sort of like contraindicating type of formations, or we did have. We had this bullish channel. We did break below that bullish channel. Let's extend it higher and we almost retested it with this evening star formation on the daily chart. Didn't quite get up to the channel, stalled at support resistance previous to that. Now we have support really coming in around about the 4,045 level. A break and a close below there on the day would be really negative in my opinion. And the weekly chart, we'd also be breaking back into this bearish channel we set up. This bearish channel we were entrenched in this for a long time up until the end of March. We've broken higher, but we posted the hanging man candle last week, and this has been followed by a bearish, almost bearish outside, bearish outside candle potential if we do limp into the weekend. That's about it on the indices, unless there's other requests, but hopefully that's enough for you, and we can go on to the guns ahead, which wasn't great yesterday, Joe.
No, it wasn't. So we had 2 trades as always. We picked them both on the stream. This is, a bit of fun. We're coming up with these ideas on the spot. We are trading them with real money. So we've got a live account with £2,000 in that we started the year with. We're ahead since we started, which is great. But simple rules that we stick to every day. Both pick trades, both have risk reward ratios better than 2 to 1. Of course, we have stops and targets, and we risk 1% of trading capital on both of these trades. So our maximum risk on the day is 2%. In fact, yesterday, the risk was actually a little bit lower because we were restricted by the size that we could get on one of the trades, on the gold trade, if you remember, Steve.
Yeah,
So we actually risked a fair amount less than what we would
yeah,
typically risk, because we're just trying to showcase the issues that traders will have, particularly if you've got smaller accounts and you're with brokers that don't allow you to trade in micro lots, which is the situation that we had yesterday. So in that instance, we will always favour risking less rather than risking more. And those are the rules we stick to, and hopefully over the course of this journey that we're all on together, we will continue to turn a profit on the account. So yesterday, the trade ideas that we published, they should be on the TradingView profile at signal
not
underscore center. Did you not do
not sure
yours
whether I got
yesterday?
no, not sure whether I got mine on, but I've got it on this screen. We can see it
Uh,
on.
Okay, I'll just show mine quickly. It was selling gold. On the daily chart, it was a major reversal that I'd highlighted and was looking for a pullback in price. We can see that big candle there that was posted overnight on Wednesday, looking for a continuation lower. It didn't happen. Prices just chopped around. I mean, the safety would have been to have the stop above those highs, but I couldn't have that luxury because the risk reward wasn't favorable enough, and I only wanted to play a pullback into this region here. So my stop was probably a bit too aggressive, and I got punished for that. And Steve, you had your trade up on the screen now. You were looking at selling Eurostox 50, clearly in a downtrend there. So you were looking to just go with the flow, but
Yeah,
we saw a bit
again, I
of.
was very aggressive with the stop, and also on here it showed that I maybe only lost like 0.4%, but obviously on the you get what's called a spread, so sometimes you will get stopped out. So it showed there the 6 o'clock candle, the high of 4,308.2. My stop was at 4,309, and obviously that got stopped out because the offer price was probably, I don't know what sort of spread they have in here. They have around about a 0.9 spread. So I was only just stopped out on that. The offer would have been 4,309.1 or 0.2. That means they will stop me out because the offer is above my stop. So that's annoying. But anyway, it still didn't work. So that's even more annoying. At one point, it was looking pretty good. I was counting chickens and everything, mate. So yeah, but again, I feel like I need to. You've got this like on the short-term chart, the hourly charts. You're getting these like little bottoming formations in the indices. Oh, FTSE, hello, that's waking up. Maybe the banks are bouncing back. I don't know. But yeah, Nasdaq. If I was looking to buy this, I'll be looking at, are we posting inverse head and shoulders formations? I like them sort of formations, but yeah, something along those lines. But yeah, I don't know if you've got any ideas at the moment, Joe.
Yeah, I was looking at a couple of New Zealand dollar ones. Obviously, non-farm payrolls today. I kind of just want to avoid getting involved in that and maybe stick to markets that are not going to be as directly impacted. So I was looking at this New Zealand dollar, Japanese yen daily chart. We can see here there's a really nice range in place at the minute. We saw this failure here on Tuesday, the 2nd of May. We posted above this resistance level, but failed, posting that shooting star candle. We then backed it up with further losses on Wednesday. Over the last couple of sessions, we've seen a bit of a recovery into the low of that candle posted on Tuesday, which for me is always a nice area to kind of to target re-entries or retests before a potential move to the downside. So I quite fancied that one. The other one I quite liked, and I don't want to be greedy here, but I was looking at New Zealand dollar CAD. So we can see here very clear downtrend in place. We've seen a couple of attempts of trying to break through the upper end of this or through this downtrend line, and we've posted some reversals. So potential for a bit of a continuation lower here. So I think I'm probably going to go with this one just because yen has been not too great of late. And we've seen a fair amount of weakness. I also like that there was a 5-wave count on the 4-hour chart on New Zealand dollar CAD. So I'm going to just zoom it into the hourly just to finesse the entry here a bit. So I want to sell this one, Steve, if that's okay.
Yeah, sorry, what is it again?
New Zealand dollar CAD. I'm going to go with a stop above those highs. And obviously to make this from a risk reward perspective interesting, I need to look for a pretty decent pullback really to 84.05. Stop 85.41.
Yep.
Target 84.05.
About 2.3 to 1 is that?
Exactly 2.3 to 1. Yeah. So just to reiterate, it's primarily the daily chart that I'm looking at here that's given me this view. Downtrend in place, we can see here multiple touch points along the way. Let's get that next one in. Each time it's got to this level, it's failed, and we're getting some indications that that may happen again. Bit of a shooting star forming very early in the session, of course, but if history is anything to go by, and that's what we rely on as technical analysts, looking at previous patterns and hope they repeat, then maybe there's an opportunity here for a decent pullback in New Zealand dollar, Canadian dollar. There are Canadian dollar, Canadian jobs numbers out later as well. So
yeah,
I'm not totally insulated from the events that we've got coming out later today.
Yeah. Okay, Joe. Cheers. Yeah, I'm sort of like a little bit, I don't know. I mean, I feel like I've got to buy gold. It's like you're buying it, you're right next to the all-time highs. It sort of like doesn't feel like the right thing. I think on the intraday trade ideas, I wrote the gold trade idea today. I'm trying to buy a dip around 2039 with stop at 2029. So similar sort of levels to watch. And what we're going to go for all-time high, Joe.
Makes sense.
It does, but I want to be a bit more aggressive with the stop. Can't really. Here we go. Yeah, going to look around these levels. 2075 is the high, the all-time high. Let's try and get that trade on. See what we can get on. Create a new order. I want to buy a market. That's right. Stop. Again, we might run into a similar sort of problem to yesterday, that we can only put on a fraction of a trade, Joe. So it's only going to be risking like just 0.5%. No, it doesn't let us risk any more than that. So yeah, going to go for that. I'm going to get long at these levels. Stop is at 2029. Target is 2075. There we go.
Okay,
the trade's
two trades on. You can show us the panel just to see them both live on the bottom. Awanda live. There we go. So the trade on, we've got the New Zealand dollar CAD trade on and Steve's gold trade. The balance 2036. So we're up 1.5 hours from where we started.
Well, yeah, nearly 2, Joe.
Yeah,
£4,
sorry, round it up.
2, yeah.
Yeah, round it up.
Yeah, so yeah, let's see how they get on. Obviously, I saw one comment from I can't see who it was from, but just saying, oh, really bad yesterday on the Gunthead. Remember, we stick to rules. We risk 1% of our account. So yeah, it's for us losing 2% on an account is really bad, but it allows us to fight another day. These are quite key lessons to learn from traders who've been trading for, I think I've been trading for like 40 years, if maybe not as many as that, but it's not far off. I'm nearly a sort of half a century, and I'm still doing it, so I'm not out. I'll take that.
Yeah, that's
But
it.
yeah, I mean, I probably traded better in the last few years than I've ever done, because I used to risk everything on the trade I did on the live floor. Every trade was like everything was on the line, but I learned from that, and
Good.
now we apply some good risk reward and trade management. That's the key.
Absolutely. It's essential, right?
Yeah, yeah. Otherwise, you're not here for long.
No. So these, we're putting our neck on the line each day with these ideas. We're very happy to be very transparent and post up what we feel and where we feel the opportunities are. It's only our opinions, but we're very clear in the approach that we take. We're risking 1%. We have stops and targets which are clearly defined. We don't adjust them. We don't play around with them. We close these ideas out at 9 o'clock if the trade ideas do not go on and hit the stops or the targets. And by maintaining that consistency, we believe over a long period of time, and we're not here for short-term trades particularly. Although these are short-term trades, we want to be trading for the next however many years we stay alive, basically, because it's
100,
what we love.
200, 300
Yeah, if we
years.
get these new pharmaceutical enhancements, then maybe we will
Yeah.
be.
There's beds you can get now. You can get these beds. That's what we're saving up for. We're saving up for a bed you lay in, and your body gets rebuilt overnight. And then you sort of like you wake up and you're 20 years younger. Then you do it again. It's like Benjamin Button. You'll be seeing us getting younger over the years, Joe.
Okay, that's something to look forward to for everybody. Okay, so let's wrap it up there. We hope everybody has a fantastic weekend. In the UK, we've got a long weekend because it's the King's coronation tomorrow, so we've got Monday off. So be careful if you're trading on Monday. We won't be here to do a stream, but we'll be back on Tuesday. So have a good one, everybody, and be careful of non-farm payrolls later. Oh, sorry, I didn't even tell people about what's out later. So we know US employment report 1:30. That's due out.
Just a
Be
small figure
careful.
then.
Just a small one, and then Canadian employment report at the same time. Next week we've got inflation data in the UK, in the US, which will be a biggie, and the latest policy decision from the Bank of England. Right, thanks for watching, everyone. We will see you next week.
Cheers.
Bye bye.